Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's weekly Nadex charts and analysis. It's one of those afternoons where you're running, you're scrambling, you're like, wait, log in, let's do this, let's do that. Markets also a little bit confused when you're looking at them. What's interesting about the markets right now is when you're looking at the markets, we're seeing a lot of, I want to say capitulation is a great word. We're kind of seeing it, return to lows from yesterday. We're seeing it kind of bounce back and forth. And with the news today, again, we have some, we know that the market is confused. Is we raising at 50, we're raising at 75, and all that's coming in tomorrow. So it's kind of an action-packed week as far as what could and what probably will happen. So let's just dive right into things because we do have a lot to cover today. And again, some very interesting analysis was going to occur. So before we begin, just again, some of you have heard this before. Every week we have some new people in. Love having new people out there. It's always great to hear new faces, new opinions. If you guys are unfamiliar with my trading style, I would say it's not uncommon. It's becoming more and more popular. I'm a price action based trader. I'm a big believer in supply and demand. I do know how to use indicators. I don't use them. I use them as a confirmation tool only. So that's a little bit different than a lot of people out there. My charts, I try to keep them as simple as possible. I will draw fibs out there because I know that Fibonacci has such a big following out there. And some people they have a hard time understanding things. Supply and demand is one of those things that you need to trade over a number of years to kind of fully appreciate how powerful it actually is. Sometimes people just need that tool that tells them, here you go. So I'll throw some fibs on the charts as well, just because it's nice to know what the masses are looking at. I've been trading since really Y2K, the 1999 time frame. So I've seen market crashes before. I'm not unaccustomed to it and what it looks like. Started with stocks, traditional options, found Forex. Love that market because of the leverage and the 24-hour nature of it. Learned how to trade futures after that. Was a financial advisor. I worked for one of the big three banks in the advisory division. It was kind of cool. I got to see their actual trading floor where all their trades from their company are processed. Very, very cool experience. It was a little tiny corner of like 6 desks that did the stock market, and then all the other desks were basically bonds. And I was like, wait, what? I didn't quite understand the relationship, but now that I do, it makes a lot more sense. So very cool. This actually needs to be updated. My daughter is not newborn. There's actually a son that is newborn. With COVID, no family picture. So one of my students gave me a hard time the other day, like, when are we going to see the new picture? We just haven't had a family picture, but the new boy is about the size of the girl in this picture. And yeah, both those boys are as tall as Melissa. So Melissa is no longer the second tallest one in the family. But yeah, so I keep busy with 4 little ones as well. So I'm not one of those 18-hour days sitting in front of a monitor looking at it type traders, nor do I believe anybody has to be. With that said, use technology, right? We have alerts. We can send things to our phones. I'm pretty sure everybody out there, actually I can say this. I'm pretty sure 100% or maybe 99.9% of our listeners all have a cell phone. Like, I don't think anybody doesn't have a cell phone this day and age. You can use technology and have it alert you when your trades are ready to go. So again, it's, no disadvantages out there not having to sit in front of a computer. But I love that. Very, very big on risk as well. So if you are like a super risky individual, like if you have an addiction to like scratch off lottery tickets, I'm like probably not your guy, right? I'm very big into risk management. I'm very big into position sizing. Risk matters most for me on every single trade. So that's why I love Nadex, just the nature of it. You know what your risk is, your maximum loss going into every single trade. I think that's absolutely amazing. I've always loved options for that purpose, and Nadex does provide that. So that's why I choose to do these. I've been working with Nadex now for about 5 years, almost 6, I guess. I think September it'll be 6 years. I've done articles, education summits for them, but I love the analysis sessions. It's kind of cool. It's only an hour, so it is hard to cover everything in 1 hour. So I do go quick, but I will give you guys my email address at the end. So if you have any questions, you're more than welcome to shoot me an email afterwards and ask me to clarify something. I do use TradingView for analysis for these sessions because it's easy. I just don't have to bounce windows around. I don't have to worry about different screens and things like that for that. So there are ways to actually, again, have your charts look exactly like my charts if you're going and doing this with me, which is kind of a cool idea. One of my students, actually just a new student, said that the other day that, she follows along and she's a second monitor. So I'm on one monitor and she has her TradingView platform up and she's kind of emulating what, the analysis that I'm doing, which I thought was pretty cool. Again, kind of seeing what the process is. So with that said, what we're going to cover today is pretty standard format. We're going to cover the disclaimer first. Sorry, I'm trying to drink my my coffee here. I am one of those people that I am fueled on coffee with 4 children. So, and I just refilled it, so it's like the perfect temperature for me right now. So I'll be sipping it. But anyway, before we look at the chart or talk about risk or money or anything, obviously we need to cover risk disclaimers out there. And you guys have heard this before. It's probably not new, slightly different. Everybody's just a little bit different. But everybody knows out there that trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost of another transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and your own risk. Past performance is not necessarily indicative of future results. None of the material presented in here or herein is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the Crypto.com group. All right, so here's the agenda. Here's what we're going to cover for the day. We're going to go in first into upcoming news events. Last week we had CPI, which was an absolute bombshell for the market. Yesterday we had a massive sell-off. We had PPI data today, which came in kind of as expected, but I feel like that one was adjusted after the CPI number. I know there were some downward revisions last time. They did make some changes, which kind of makes sense why they hit it on this time. But everybody knows tomorrow is the day. Tomorrow is the big day. So we're going to look at those and see how we can kind of play them for the rest of the week. We are officially in a bear market again. Pricing needed to pull back so much, and yesterday's close put us in that. So again, we can say it. We've now been pushed into a bear market. Then what we're going to do is we're going to break down the indices. We'll kind of see where they're at and see how the potential trading looks. We'll cover Forex. Forex, I said before, 2022 is the year of Forex again, bringing all its power back. Everybody's raising. Australia just did a 50 basis point, surprise hike. The United States is raising tomorrow, whether 0.5, 0.75, or the slimmest of chances 1.0. I don't think they're going that far, but again, a lot of currency action right now in the markets. If you're not trading currencies, don't care about it, don't look at it. You are missing so many opportunities right now. That's like saying, I can win the lottery, but I'm only going to take money from this one win, right? Or going to Vegas and be like, you know what? I know that I can win at 5 different tables, but I only want money from that one over there. Or, slot machines. I'm only going to win from the green slot machine on the 7th row in the 3rd position, right? That's basically what you're saying to yourself, is that you don't like money. So that's Forex. And then we'll mention commodities. Again, just the biggies: gold, silver, oil, natural gas. And I don't have it on here. Eventually I will add it when we actually have more products that we can, or not we, but Nadex. I'm not a Nadex employee, but once Nadex has more we can trade. I will mention cryptos because they are definitely a gauge right now, risk off. Once the new products come out for Nadex and you can actually trade those, because again, being owned by Crypto.com gives them kind of new avenues there. We will start doing some analysis as well. They've also fallen through the floor. Many people are calling for bottoms at like 26,000. We actually got down to the 22s. So again, just major people. And actually there's some big names out there that have said, if it gets down to 20, I'm getting in, or 16 is my magic number. Rich Dad, Poor Dad, you know him. I think he said whether 20 or 16, I forget which one. Or maybe he's buying at 20, but then buying a whole heck of a lot more if it gets down to 16. So, you have some big names out there. I'm trying to, get into that market before the regulation gets involved. So with that, let's go over and let's look at these. Okay. All right. News-wise. So right now, again, as far as before we jump into the charts, we are seeing pound weakness. The pound, the UK is already in a recession. Their inflation is already up over 9%. They've already raised 4 times. Look at that. There you go. PPI is not much help in trying to decide between 50 and 75. More people are thinking it's going to be 75 right now. I kind of feel like if they only do, so here's the thing, they can't win. There's no way the Fed can win. If they do the 0.5 like they said they're going to do, the market is not going to feel it. The market is kind of gauging or factoring in 7.5 right now. I think if we get 0.5, the market explodes, right? 0.75, if they do it, it's kind of what the market wants right now. But at the same time, then it's like, well, wait a second. Are you guys reacting to one data point? You're reacting to CPI. Like, are you, or do you, is your hand pushed? So it's kind of like they can't necessarily win either way. It kind of goes back to if you have poor planning and you're required to do things last minute, it's kind of like, was that the plan? Did something change? Are you forced to do this? Are you being too reactionary? Do you have enough data truly to make? So there's a lot going on with that. but interesting that there's articles not coming out. But anyway, the PPI data came in. Pound's already in recession. That's why we're seeing the most movement there. And again, it truly is. Pound dollar down 190. Euro pound up 106 is an absolutely monstrous. I would be looking for a top in this one. Because there's still a lot to be said. Yes, the pound is in a bad spot. Europe is not officially in a recession yet. They're heading there. Everybody else is too. But I think there's a couple more pieces to the drop as far as the Ukrainian situation that are going to lead Europe. They're like, yeah, we're going to block this, but if we do, we know it's going to push us into a recession. So they're going to have rising interest rates and kind of trying to eliminate, any type of Russian exposure to their nation. So, or their kind of alliance. So I think there's again, your weakness coming down the road. But we do know that in July, the European Union is going to raise their interest rate for the first time. So again, is it a major mover? No, I mean, euro dollar's down about 35. So it's not blowing things out of the water, but we do have dollar strength, right? Now, the dollar strength that we're seeing obviously is tomorrow. That's where the news comes in. So tomorrow, they're expected to raise at least 0.5. Could it be more than 0.5? Absolutely. Absolutely. I think right now, actually, the consensus is that it will be 0.75 because the number for CPI last week was absolutely huge. Huge. It was 3 times what it was, showing that the Fed's current interest rate raising policy is not working. Yeah, going from 1 to 1.75 would be a huge jump. I don't know if that would change the 0.5 after, but if you think about it, the next two meetings they said we're doing 0.5 and 0.5, which would bring us to 2%. Okay, mortgage rates are already getting crazy. If they do a 0.75, that I think takes the average mortgage rate over 6. We're already at 22-year lows in new mortgages. If they raise it even more, how much lower is that number going to get? It gets pretty crazy. But, tomorrow morning retail sales, absolutely monstrous number. But look at this, retail sales month over month, 0.1. Wow, could we start? Could the spenders could the spenders disappear suddenly very quickly? This is an interesting figure. Again, inflation's out of control, but so far the consumer, the buyer, has kept us in the market, right? And we've heard about that yes, we're in, right? That the consumer, people are still spending money, right? And the government, the White House has said that the economy's good, people are spending money. All of a sudden this goes negative, that line is gone, and we have really, really high inflation. So yeah, interesting number tomorrow. And again, obviously the FOMC already knows what this data is, but the rate rise is coming in at 2 p.m. tomorrow. And then we actually have some other pretty significant data. We have unemployment rates supposed to go down in Australia. That's a big one. The unemployment change, hiring jobs back. Australia already, talking about rate hikes and getting more aggressive. So that's tomorrow night at 9:30. This could be an interesting play tomorrow as well, because after the rate rise, we could see, large amounts of dollar strength coming in, depending on what's factored in right now. And then we could see Australian strength come in as a reversal, as there's profit taking from the dollar in the Aussie. So there could be some short opportunity tomorrow. So pretty interesting, again, kind of a setup, kind of a ping pong, right? Kind of like a ping pong back and forth. So that could be really cool. And then Thursday, we have, again, monetary policy rate, policy assessments in the Swiss franc. And then we have, again, the UK raising 0.25 again. That's number 5, right? But they're already in recession. Again, it's 100%. Let's raise. We got to raise again. So again, all this negativity that we're seeing in the pound, is this setting up for another interest rate rise? I think potentially yes, because yes, it's probably factored in, but this is a lot of weakness, meaning that it's not enough. But they're already in a recession, right? So it's kind of hard for them to say, hey, we got to raise it 0.5, but their inflation's over 9%. So it's just getting worse. The market wants more, but 0.25 will bring some strength in. So could this pre-positioning be for pound strength on Thursday? I think so. And then we have monetary policy statement out of Japan. And then Friday, we have Powell speaking. And again, Powell speaking about delivering opening marks in an inaugural conference on the international roles of the U.S. dollar. This is, again, not necessarily talking about dollar policy, but in the inaugural conference on the international roles of the dollar, this is going to be a very, very big thing in the next few years. Here's why, okay? The dollar this year, obviously what Russia has done with the Ukraine, absolutely horrible. I understand their point of view. I understand the world's point of view. Here's the thing. The dollar was weaponized this year, okay? Because of that weaponization of the dollar, right? Because of them cutting funds off and not letting Russia process payments and things like that, trying to attack their credit. Multiple countries in the world now have looked to other currencies because, again, of what's happened. If you can't process payments, it can't be the world's currency. This is Powell trying to kind of undo some of the harm. Okay. Israel has now, for the first time, sold dollars and actually brought on Chinese currency. The Middle East, OPEC, has also now accepted payments and other things besides the dollar because of it. What he says, I think, is extremely important to see how long the world will be the dollar will be the world's kind of reserve currency. It is very, very much at risk right now, especially seeing China growing with the way that it has, with other nations also taking on board more Chinese currency and selling dollars. Again, they are, look at their population. They dwarf the United States. So this is a very, very important conference. It is before the market. Again, we will be digesting a couple days worth of interest rate hikes and see what it looks like. I think he has the potential here to really kind of strengthen the dollar, but at the same time also weaken the dollar. So, and again, if you guys are looking for kind of a way to cap off Friday after absolute craziness on Wednesday and Thursday, this is kind of one of those things that this is a speech. And again, talking about deciphering interest rates. If it's an international thing, our interest rates aren't going to be a big deal. But the way that we handle inflation and the way that this is going to be used, big, big news opportunity that morning. Very, very cool way to play it. Again, this is kind of going further down the road. Thursday night, that could be a great way to play this, looking at kind of some of these overnight positions, right? It is Friday, so all the knockouts actually do expire that day. So there's not going to be a lot of time premium baked into them. But it could kind of give us an idea of where the markets are, what the market's feeling, where it's moving, right? I mean, if we have massive movement on Wednesday, Thursday could be a slowdown day, Friday could be a reversal day. This could really feed into that. So I think that Friday could be a very, lack of any real true US based news. This, again, keeping the dollar out there, and the dollar has to show strength. It's got to show stability. He's got to say a lot of the right things, but it really could bring some strength back in, talking about the US economy, getting it under control, and how prosperous the US is going to be in the future. Could be good for the overall stock indices, okay, as well as some currency movement. So could be cool. As far as big actual news, there's really not. I wouldn't say tons. I mean, 9 hours ago, the BOJ is talking. They're increasing their purchases. Providing some stability with it. They've kind of broken some circuit breakers. You can see that the RBA is getting serious. They're talking about the hawkish central bank surprises this week, delivering an unexpected 50 basis point rate hike. Again, we've been talking about this for a while, that they're going there. And again, look, the other news out there, the Feds could approve a 0.75%. The Wall Street Journal saying they could do 0.75. They could. Early signs are saying this, right? Actually, officials had earlier signaled plans for 0.5, but they could do it, So again, you hear it here. Goldman Sachs has said it. Everybody is now starting to say 0.75, and we'll see whether or not Powell picks that up. But news-wise, a lot of stuff there, right? A lot of stuff there. The one thing that you will notice, and again, right now, White House is discussing irresponsible tariffs by former. Yeah, here we go. Yeah. Unfortunately, this is why China is taking over. There was tariffs, and then there was trade agreements, and they broke all the trade agreements, and now we're going to remove the tariffs to make it easier for them to, again, continue doing bad things. And again, this is why China is continuing to get further ahead. One thing that is missing, okay, it is the blame of everything right now, right? What's called the Putin price hike. You'll notice that we're missing a lot of information about what's happening in the Ukraine over here right now. We're not really hearing much about it anymore, and it's kind of disappearing. And again, it was a little bit of I don't want to say fatigue, right? If it's the war fatigue, but again, oil prices are being blamed for that, food prices, and a lot of the inflationary issues right now are being blamed on that, but there's not a lot of headlines from it. It is actually not turned, if you guys are keeping up with it, it is not turned in the most positive way. And again, the markets are really focused on the interest rate changes right now. And that is one of those things that we need to kind of, 2-3 weeks ago, we were talking about, are they cutting off, are they cutting off oil? Are they cutting off natural gas? Some of it is allowed to come through pipelines, but some of it's not allowed to do this. And it was really changing the price of everything. We're not seeing that anymore. A lot of the headlines have stopped. So right now, and again, this is actually, I just saw it down here. Where was it? This one, right? Hot inflation dims likelihood of the soft landing. And this is kind of where people are looking at. We're hearing recession. And again, they keep talking about the 0.5 could be a soft landing. This 0.75 guarantee we're going to a recession is the worst, not even here. This is what we're seeing. Okay, so again, it just goes to show you how important tomorrow is going to be in your trading and how to protect yourself. Let's dive into charts and talk about that right now. And I guess we're going to start off with the VIX, because the VIX right now, although down 3%, which is great, we can say, is the VIX low or high right now, right? You're going to say, yeah, it's kind of up there. And yes, 33 is a very, very high number. We don't even really, I mean, again, it's really kind of holding. Like today would have been the day to come back. Like, yes, there's nothing today. We know tomorrow PPI is out and there was a big drop, but it's kind of it's holding it kind of an accelerated high, right? Is it justified to be this high? Kind of. I mean, there is a lot going on. There's a lot of fear. And it brings an interesting question. The Fed, are they trying to push us into a recession? And they've told us enough times that they may have to do that, that could be our goal. If we drive us into recession, that will lower the labor demand and that will make everybody cut back and that will lower down inflationary pressures. If they do that now, is there a lot of fear associated around that? Because they've been telling us forever that we are going into a recession. So the VIX being unusually high right now, again, it is justified to a bit to be this high, but we should have probably had a little more pullback. But really what's going to happen, and the question is, have traders adjusted? Do traders understand now how to play a down market? Because many of them don't, you know. Big question a lot of people have is like, how much money out there is in 401ks right now, right? Are you hedged to a down market in a recession in your 401k? And the answer is no. So a lot of people don't fully understand how to take advantage of that, right? So right now the VIX is high, it is down. Markets are kind of mixed right now, and again, it should be pulling back, but I think we will probably spike up a bit more. The dollar, absolutely high, and again, we've taken some bounces off this level at 105. I marked 104 here, but again, we had this nice push down and then another push off of it, and again, one, really two or three here, right? Here's your first, right? 1, 2, and one of those two. There's 3, there's 4. It should have broken and gone higher. It's absolutely insane talking about the dollar up at 105. And in fact, we got up to 105.46. Okay. Absolutely insane. I'm used to talking about the dollar between 97 and 98, and you're thinking, wow, that's high. If we get to 100, that'd be insane. 105 is just absolutely loony, right? And again, if we raise 0.75 tomorrow, the question is how much is factored in? If we get a 0.5, is the dollar going to tank because the market wants more? Is 0.5 going to send it higher, or is it going to do absolutely nothing because it's already baked into the market? If it's 1, does the market believe that, or are we hitting 106 tomorrow? A lot of factors, a lot of questions. And again, this is why we're in the right place, right? Nadex, you cannot lose more than the cost of whatever you enter the trade in, right? Including the fee per contract. If you're in futures and you're on the wrong side of this one and it gets past, you're losing an account there. So anyway, here's the ES. And what we typically do is we look at the ES on the 15-minute. And one of the things we've talked about, and again, I do not have a class. This is something I just talk about. I probably should put the class together because I keep getting asked about the rules for it. It seems like it works well. We look at the 15-minute because, again, looking at hourly, 4-hour charts, even 30 minutes, very, very difficult in a market that's only open for a few hours a day versus currencies that are open 24 hours a day. And there's actually a market open funding that, fueling those. U.S. market right now, if we look at the 9:30 window, 9:30 would have been right here, okay? Now, it did drive down from 9 o'clock, and what I mentioned today is look to see where this kind of drives. So there was an initial push down, right? And the 9:30 candle is this red one. And then we had an immediate pullback, and 10:15 is when it kind of triggered. So there was actually a trade set up this morning sitting right here, okay? Again, price drove down, right? 9:30 open, 10 o'clock candle is right here. We pushed back up again, and boom, we kind of rolled back down. Now, is this enough room to really be placing trades? I would have said this morning's a little bit more challenging. Why? We knew we had buyers at 37.31. We talked about that Monday in our morning session. I missed this one by 2 points. It came back and it's still hitting those same buyers. Now it looks like I've missed it by 2. Actually, the low over here was, yes, I missed it by less than 2. But we knew we had buyers coming in the past. Those buyers, I think I had to find this one on an hourly. Yeah. Here's the last time the price was this low in this 37.31 to 37.15 level. You can see it drove in and supported itself, came in, touched it and popped again, came in, touched and popped it again in a very, very strong push. We're sitting there now. We know that this is a level. And again, right now they are supporting. They will not last forever. So a couple ways we can play this. I mean, if you're really looking for this to go long, I guess that you could. But right now, I would say with a downtrend, any type of pullback is where we're looking to get in. We haven't been able to get up to the 23.6 for fib. So again, there will be artificial sellers coming in up there at that level. But right now, looking at this, you can see that we did have some basing. And this actually hit early morning today. There was this level of basing here that was touched, and then again, another push off. So we really kind of have a couple different areas of sellers, right? Again, let me drop back down to 15. Yeah, you can see that there. This basing, this touch, this touch, this touch. So we have sellers here, we have sellers here, we have sellers here. We're putting a lot of areas up. Right now, it's kind of more prime for this market to continue to push lower. And the question is really, how do we play this? Like, where do the trend change? Like, how do we get into this one? I would say right now for me, the Harry Potter trade kind of makes the most sense. It's finding an old area where there used to be sellers or buyers, and in this case, it was buyers. If we can base through this level, and again, this is probably something that we can do maybe later today. Again, we're looking for a break of that level and a push lower. So I would say if we can get some type, and again, it's trying to get through this level. It's fighting. It's fighting. If we can get enough push through, and we can, kind of base down. What we're looking to do is looking for a push down, a level of basing, and then a pull back up again, right? The pause is what's important. It's not a spike through and a spike up. We're looking for a drop where it's like, woof, we finally broke through. We got to give the old buyers a time, like a chance, an opportunity to become, the old buyers, they become new sellers, right? So what we're looking for really is a break of probably 37, 15, 25. If we can get a base, a drop, and a pull back in, that gives us the opportunity to kind of go further. Where can this head today? So let me go back up to the hourly for this one. I really don't think that this is the bottom for the week based off of all the news we have. You can see after this level is broken here, we really don't have any confirmed buyers coming in until all the way down here at 36.58. So that's not quite 100 points, but we could potentially have another 100 points to the downside. Let's see what the daily ATR is on this one. Right now, the daily ATR, daily ATR is 106. So we are definitely well within striking distance of that area. So, overall, I would say that I guess the true nature tomorrow is going to be whether it's a 0.5, 0.75, or 1.0. I honestly believe if we get them to come in, I think tomorrow a lot of the price action we see before the release is going to be what dictates where this moves. I think today we can come down and base in here, and I think the market pushes down in the overnight if we can get a trigger below that, and that would be a break of 37.15, coming down most likely down to this 3666.75, 3666.75 would be the target on that one. If we start to rally up in the overnight, then yeah, we're looking for a drop tomorrow. If we continue to see it pushing down, all of the data may be baked in. And then I'll tell you right now, although I think we need at least a 0.75, I'd like a 1.0. I'm going to, my level of surprise if PAL does a 0.5 because they've telegraphed it so much would be zip, right? I believe if we push down in the overnight and PAL comes out with a 0.5, because that was factored in saying, listen, we can't, CPI is not our preferred method of inflation, right? And gauge. I mean, that's not what we gauge it off of. That's not what we're looking at. PCE actually is. We're still on track. It's just, CPI is not an accurate reading. That's not, that it doesn't have to do with, with anything, right? They could potentially say that. I think I think the slow and steady and maybe saying, hey, listen, we'll do 0.5, 0.5, 0.5, but we're not going to do 0.75. That would be irrational for us to look at one data point. I think this market explodes tomorrow and goes up, right? Because I think at this part, the market is and traders are like, yep, 0.75, 0.75. So I think there's long opportunity tomorrow. Where it is right now, I can't forecast where it's going to come down to. But the way to look at that is to, again, we'll see kind of where it pushes in the overnight, jump on tomorrow's YouTube session in the morning from 8:45 to 9, and we'll see where the pop is. But right now, look for a level of basing. We're really pushing these buyers. Look for a basing and look for 36.66. NQ, also doing the same thing. We know we had buyers in here, and again, that's why it's black, the 11,265. Again, I missed it again. I missed it by 0.25, right? But that's where it's pushing. We don't necessarily have any buyers in this one till 11,104, so we do have a little bit of room to run on this one. I will say, watch out for this right here, right? And it's going to move on me. Can I change the color of it? Yeah, let's do this. Right there. 11,000 is going to be an absolutely huge number in the NQ. It is a huge psychological level. Dropping below 12,000 was, but once we break through 11,000, that's the next huge major milestone. Right now, this is the strongest it's holding up, point 0.1. I do believe that this, again, there's a nice trend line right here. This is an easy trend line for people to grab. You could make an argument. You could literally draw it back from here if you really wanted to and say, hey, listen, this is the trend line. This is where Friday's close is. It's kind of staying within that channel. I'd say there's more negativity to the downside at this point. Once we break through the set of buyers at 11,265, again, we've bounced off that level twice. I think what we do here at 11,104 is really going to be the difference. Could it drop down and then maybe an end of the day rally somewhat? Sure, we could. But I think right now we should be targeting shorts. And anytime we have decent pullbacks, again, look for 11,000 as our target. Again, I'm curious to see if we take a little bit of a hiccup off this level for tomorrow, but we got some room to run. And again, right now, we just had a completion in the overnight, or really, I guess yesterday. Right now, we're just looking for good pullback levels. And let's see, where are our 23? I'm going to look to see where our 23.6 would be on this one. Yeah, it's right around the same level. Yeah, it's hiding right at that same spot, so we don't necessarily need it. Take this off. We're going to take this one off right now. Let's take this off. Let's move this across. Let's drop it down to a 15 real fast. Yeah, still probably hold that one. So again, I think there's probably one more short out of 11,573.50. But right now you can say, are we trending? No. It's almost completely flat right now in preparation for tomorrow. So we'll see where it gets driven with retail sales, and I think retail sales could drive us in one direction with an FOMC reversal. The Dow. Dow, unfortunately, has not pulled back. It did break through yesterday. We talked about a target of 30,403, and it literally bounced right off of that level. It hit it, broke through, came back, and started basing in it. So right now, this one is kind of set up, and again, kind of one of those continuation Harry Potter-based trades. It's kind of pulling back. I think that this one can head lower as well. Dow is the weakest at 0.77. Right now, we are kind of having like a little bit of a lunchtime reprieve, and I would say that the Dow right now probably has the ability to go down here. I think tomorrow for retail sales, I think the way to play that will be the Dow and the Russell, not so much the ES, right? But when you start talking about retail sales, like the goods and services we're buying at the stores right now, I think both of these two have the biggest kind of pitch. Now, I will say, right now with where we are, we talked about big psychological levels. Come on, click. Right. Style. Whoops. Oh, I want it bigger. We'll do it this way. I can make it up here. That's going to be a big deal. 30,000. It will act as a magnet. We're about 295 points away from it now. Can it eat it up today? Sure, it could. 4,000, 400 in the Dow is not really a big movement. We're taking the reprieve now, but if they start to accelerate lower once traders get back from lunch, I think our target today is 30,000. Closing below 30,000, like I mentioned, 11,000 is a big number. It's not as big as 10,000 would be, right, for the NQ. 30,000 is quite a large number. Remember, this is a number that nobody thought we were going to be able to do. And again, based off of those, low interest rate policies, everything just took off, right? 30,000, if we close below 30,000 today, this is one of those major, major, major numbers that a lot of people are like, oh, we've broken 30,000. We're going back down to 26, 28, 22, right? With everything we're seeing, I think that's our first target. I think that could be used as a new ceiling. Once it's broken, I would say right now it'd be the floor. I think tomorrow it could magically suddenly become the ceiling, and that may be an area that we have a hard time breaking back through, at least in the next 6 months. Now, if we get a 0.5 tomorrow, could it be a bounce? I do believe so. I think the market's already factored in 7.5. If it comes in at 0.5, I think we're decent. But retail sales is going to affect this one tomorrow. So, yep, if you're short today, 30,000 is your target. Russell yesterday I mentioned would be the weakest, and we talked on basically that we were going to break through 1,800. We did. We broke through 1,800. Had a couple different trades. We're now hanging out the lows, and it's kind of doing the same thing. It's doing the same level down here. Again, it's having a hard time. Let's go back up to an hourly. I think I can see them. Yeah. So right now, this is what we're dealing with. This is an old level. We had a bottom, nice push out of it, came back down, touched it, and boom, it confirmed it right here. If I push this across, that's what we're running into right now. So let's see, can we see a level below that? It does not appear that we can. Let's go up to a 4-hour. Yeah, I can see it here. Looks like, you know what, maybe can I see it on a 2-hour? That would be awesome if I could. We can, yes, yes, yes. Not the best candles though. We're gonna throw some candles here. I don't need it to be that big. Let's change it to, we're gonna change it to green and just make it a little bit smaller. Oof, look at that. If we can break through 1690, we got quite a runner down. Oof, that could be rough. All right, so there's our, on a 2-hour time frame, there's our 2-hour levels. So that's kind of where we're at right now. That's an interesting setup there. So right now, we know we're at a level right now. Again, it's hitting it a lot of times. It's slowly grinding through. We know we have a level just sitting right below it. Okay, could there be an afternoon reprieve in this one? Maybe, right? But there's one area of buyers. I kind of like the area of buyers down a little bit lower as well. So we kind of have two levels where we could, be provided with some type of reversal. Maybe retail sales looks awesome and that sends this higher. Retail looks negative. These could potentially be two sell areas. And again, what we may do is we may end up, this is what it could potentially look like. If we have the base in here, we eat the rest up, we punch down into this level where we know they're buyers, and then it pulls back up again. And then we look to push all the way down into this level, right? There's your Harry Potter formation, a basing, a drop, a base, a pullback to that same level, establishes your risk, and then boom, because we know that this level is probably getting tested at this point. This one we know is the next fresh level. Let me put some prices on here just so you guys can get an idea where this is at. I'm going to make these yellow and black just so you can see them better. Looks like if we have buyers coming in at 1696. It looks like if we have, again, the basing level that we're in right now is at 1698.3. The overall target, again, would be target first or potential reversal later, would be 1665. Now, these are hourly based levels. Let's see. ETR right now is 56. Let's see. Actually, from where current price is right now, 56 puts us right there. So we're well within range of these. We're well within range. So again, keep it on the radar. Again, raising interest rates to 0.75. It will hurt the Dow and the Russell the most. Again, find the one that you like the most. You should be a specialist in one of these three at a minimum, no matter what you trade. You'll understand the heartbeats a little bit more on there, but definitely some technical plays here. Let's dive over into the Aussie. So again, Aussie driving down. Right now, we're kind of in this pattern. You can see that this is an old level we talked about. It was a profit target for the Harry Potter trade down here, right? The break of the old level, it came up and grabbed it. It formed the new base. And again, if we continued that base across, it pulled down a base that came back and used that same new established level. And there's your second trade. All right, this one I believe is out too. Yeah, it's 1 of 3 is right there. So yeah, it's officially out now. It just got out. So there's another one. We're waiting for this to come all the way down to 68.35. Again, a lot of this is being driven, by what the news is expected to be tomorrow. This is a larger time frame level, so if we are going to have reversal, that could be the level where there's a reversal. It is about 36, 38 pips down. We're getting close to it. The big question is going to be what happens tomorrow. Could we drop down, still get a 0.5 and rally higher? We could. We absolutely could. Like I said, I think if Powell puts in a 0.5, which honestly, it wouldn't surprise me at all. I think the market is going to be very disappointed as the market is factoring in 7.5 now. So, yeah, in which case, where is that? That is 14 is right here. Yeah. In which case, this is what that would look like. Right? It's well within the time frame of that happening. There we go. Sorry about that. It always helps when you go to move and you step on the cord and it pulls the plug out of your headphones. So yeah, that's a potential scenario. But right now, again, I'm still a believer in short. I think we come down. I think your targets are 68.35. Look for a decent bounce there. Also stabilizing. These are two levels we talked about. You can see that it kind of came down and had issues with the first one, then rode along the top, rode the top again. touched the bottom one, came back up, grabbed the old one, touched the bottom one again, pushed back up and grabbed the old one, and now it's pushing back down again. And I think there's probably a break in here. On the 30-minute, we do have the 50% retracement. That's coming in at 92.10. Right now with the Aussie, I would say be cautious. Tomorrow, what happens with retail sales as well as FOMC will pull the yen around with it. But right now, this pair is we're seeing some yen strength come back in. We're seeing a little bit of, yen is I would say it does have some strength out there. I wouldn't say it's the most powerful pair. But again, the Aussie is pairing some of the losses too with gold. Gold is dragging the Aussie down right now. I think that this pair may have the potential for a bounce tomorrow. But right now, because it's literally chopping back and forth between two levels, the 50 doesn't have anything clean. And you can see there's not really, it was a very grindy up. There's not really a whole lot clean until we got much, much lower. So right now, Aussie yen I would rate as maybe like a B minus, C plus type trade setup pair. There's just not really a lot out there right now that gives us a lot of good opportunity. Okay. Euro pound. Now, Euro pound is spiking. We had a level we talked about, that 86.69. I don't remember where that was for, where it's at. Yeah, it's a level right up here, right? It looks like it is now, it looks like we have now actually pushed through that a little bit. And we kind of have smooth sailing. We don't really have anything kind of labeled on the chart. It's a higher time frame zone. Until all the way up top. Where's this at? This is at, let's put this on here for you guys. 87.44, right? So we got some room to run. Another 57 pips. We know that they are raising interest rates right here. It's supposed to be factored in. Rising interest rates is technically a strength. This is a weakness. Could this rally completely up to here? Yes. And then could that lead us down to a here? Yes. So it's kind of setting up in that fashion. It's a little bit early for pre-positioning, but not necessarily unexpected. Okay. If we're able to get up to 87, God forbid we're at 87.44 before the news release. If we can come over here, could be a great shorting opportunity. Price may be over in here somewhere, and it may be a short from here. I don't know. But raising those interest rates after a big rally up, that's good. Now, if we do turn and we pull back, there could also be a long opportunity from this, but it really depends on what we do from Wednesday night into Thursday morning. Looking at a release on Thursday, on Tuesday for something like an interest rate, a little bit more difficult. So, but right now, if it follows this path all the way up and grinds up 35 pips in 2 days, which it absolutely can do, it looks like it's set up for a short. Now, Euro yen. Euro yen is holding firm. We do have a Harry Potter trade here. I love this. I like it even more right now. We talked about the 50% could be a great level for a long. Right? We knew that we had some buyers in here. It got kind of chewed up, but we knew we'd have buyers step in, which was great. We were waiting for that to break. It hit once, based, and then broke. It's like, yes. Came back up, did it again, eating up more orders there. Love it. So the 50% has had two opportunities at this point. That was the 140 that we broke through. And now it's kind of stabilized a little bit, but it's running into some sellers here, right? Running into some sellers. So at this point, if you guys know how to set alerts, I would set an alert on this one for yourself. And the reason why is because I don't know when it's going to break, but I do know, confirm short, but I do know that this area now has been hit 2 additional times and pushed it very, very to the brink. Eventually, the 50% traders are going to step out. There's not enough people in here buying. It should become the new, should become the new the new top where people are selling from. And we know for a 1 to 3 risk to reward ratio trade, right? 1 risk for 3 profit. That just happens to come down to the 61.8, which fib traders absolutely love the 61.8, right? I mean, that's like a magical number. That's like an Obi-Wan and an Anakin all at one shot. So that's a great target for us. If we can get in when people are trying to buy this for a reversal, perfect opportunity. Gotta love that. So I'm good with that one. And again, the yen will get, there's 2 things on this one. When the euro pound starts to flip back again because of some profit taking, that will bring yen weakness in, as well as the yen can also potentially get some strength from FOMC tomorrow. That could also bring this back to the downside. So there's a lot of reasons why this one could potentially turn. Okay, euro dollar. So euro dollar, we're going to 103. Yesterday I was like, yeah, we can get there. We can get there. It rode it down, and I guess late last night at 4 we got kind of a low, and we're kind of stabilizing right now. I have my parity pom poms out here. I am cheering, but it's got to get through this 103.64 level. I was hoping to get down there. We know that we're looking for, this is kind of what we can do in one day as far as movement goes. I'll just delete it so we don't confuse people. Right now, I would say that, hey, it's holding firm. It doesn't really know what to do with that PPI data today. It didn't really tell us one way or the other if they're going to signal the 0.5. As I said before, I feel that the market is really starting to price the 0.75 in. A lot of people are talking about it, but the more people that are talking about it, the more I'm kind of believing now that I think it's going to just be a 0.5. I think the right thing to do is 0.75, but thinking about the way that Powell is handling this and how he's, he doesn't want to be the reason we go into a recession, and the soft landing is still his hope. If retail sales is not great tomorrow, that's every reason in the world. Like, he's like, yeah, look, it's already working. Retail sales is down. CPI is not our preferred gauge of inflation. He's got every reason in the world to say 0.5, even though the new in is 0.7. Everybody wants 0.75. I think if he gets a 0.5, I think that brings massive levels of weakness in. I think we could take a long off 103.65, or again, if they do the 1.0 or the 7.5, I think potentially we can get down and then a reversal off 102.37. So I hate to say it, but both of these are buys going kind of anti-dollar. But seeing what we've seen, and again, I've kind of, I don't know, I've kind of said what I expect Powell to do for the last year, and we've been kind of right. If he comes in with that 0.5, making up every excuse in the world, that look, retail sales is going down, the demand destruction is occurring, those would both be weak dollar, kind of statements and responses. So those would both be an up for the euro dollar. So again, sometimes you have your beliefs, but eventually you got to fall back to what you're seeing in a chart. You cover the top of this and say, I don't know that this is the euro. I don't know what's going to happen. I have no gut reaction, but I have two major levels here on higher time frames. These are both signaling along, right? It's kind of like if any of you guys use Waze out there, when Waze tells you a funky route, and you're like, I'm not taking that one. I'm just going to do my normal route. And then you sit in like a crazy accident for an extra hour and you curse the fact that you didn't trust Waze. Kind of the same thing, right? If you ever thought that you knew that you were smarter than Waze, sometimes you got to look at it that way. Pound yen. So again, pound yen continue to deteriorate. I think that this is pre-positioning. I would actually like if we can get down to 160. If we can get the 160 by over here, I think that would be great. There is obviously some, yen play in this one, but a lot of this, again, we do have kind of a Harry Potter setup here. We did talk about a short through. We have not gotten our entry yet. It dropped and then it kind of came in touch. It really didn't do a base there. It touched and came back. It's touched it on every single candle. Kind of looking for a decent pullback, and actually I may even use this right up here for this one. I'm looking for this to go short. I think my overall target right now is going to be down here at 161.18. It got close, but I think that's our first stop, and there's a little bit of a basing before we go all the way down to the 160. I think that this pair is going to be a little bit volatile. I have a feeling that the spread on this one is going to be quite wide for FOMC, so it may be hard to play. But I will say, after there's all the destruction of kind of a lot of people tomorrow after FOMC, this could be a good trade tomorrow night. After there's massive movements from an interest rate rise, whether it be happy or not happy, the next morning we have the pound raising 0.25. So yeah, I think there could be, could there be a large explosion higher? Could be. I don't know that there will be, but I like the way this one's setting up. So, one additional level here is there. And actually this is a confirmed level here. Again, a nice pullback, right? Nice pullback and a big collapse. This was another nice little pullback. So let's throw a couple of these longs on here. Or I'm sorry, shorts. 164.15, 162.71. And you know what? I'm just going to take this one. Again, I would say my target right now is that 160 mark. That's only 190 pips away. Absolutely within one daily ATR of movement. Again, will it be the yen that does it or the pound? I don't know, but I think this one has one more day worth of movement before we really get across. And if we can spend the next 48 hours driving all the way down here, that would be a long opportunity for me on Thursday. The pound obviously continuing to go lower. Now this one, yeah, you hate to see this. So this one actually it ended up coming through, did not give us a Harry Potter entry, came up and based in there again. So how'd you say, oh, listen, it's basing, I'm going long or going short this time? It did. It completed and went all the way down. Then it came back up again. And really all that it did was it grabbed the levels that we had here. Again, there was your base. There was your confirmation here. It came back up and grabbed that confirmation again. So there was a quick scalp here. This was a European session open, was right. 3 o'clock is right there, right? So again, signal a short in a 30-minute level. I don't know what that is. I can remove that just to make it lazy for you. And again, drove all the way through. Our target was 120.96. You can see that it kind of hit in there and shot back and forth and based and now went lower. As far as the pound dollar goes, let me bring this one up to a 4-hour because I feel like we really need it. That was our target, and we got broken through. Let's see. The problem is, right now, this is the analysis. This is the data that we're using. This is March in 2020. Does everybody remember what happened in March 2020? I hope so. That is when we started having all the effects of COVID. Well, the shutdowns, right? That's when everybody realized, like, oh God, this is going to get bad. And that's where we started to see basically the pound taking off because of the dollar. So unfortunately, the analysis is a little bit hard here because this is one of those events that, well, you want to say that it doesn't happen all the time, but it's kind of happening all the time now. Let's see, can we see it on a 2-hour? We can. A little bit of a gap in here. I'm going to pull this. I think we can still see that. There's a level. And again, this is what we're bouncing off of right now on a 2-hour. Problem with this is we don't really have much until down here again. I'm going to mark it there. And then, again, this actually may be a level. This may not be the freshest level down here, but those are the two levels on that one. Bring it across. Yeah, it looks like it broke through that one, so we don't actually need that anymore. So yeah, it looks like the next level of potential buyers coming into the market. Let's move these real quick. And again, I'm on a 2-hour right now. If you guys are wondering, you're trying to set it up at home. There's your 2-hour. 118.57 and 114. Wow, look at that. Wow, that's some destruction in the pound dollar. So again, they are raising. They're not doing it as fast. This is their fifth time. They'll be 0.125. But the reality is, if the U.S. raises, 0.5 or 0.75, and we're getting closer to 2, we are actually have a higher interest rate than the pound, and the dollar yen would make more sense for a carry trade than the pound yen. So, yeah, these are both big levels. But again, 120, we're right there right now, 120 flat. Big psychological level breaking below 120 in the pound dollar. Those are two levels, and again, depending on retail sales, if it helps us, I think both of these could be, they could be decent pop levels. Kind of check them out. Yeah, that's their interest rate there. I'm on a 2 hours. Like, wait, that's way closer. Why is it so close? So basically, here are the two big news events. Let's mark these off real quick. 14 is right there, and then the pound one is right there, correct? Yeah. So there's your two major news events. You can see in very, very close proximity. So we'll take that one off. I'll pull this alert out. We don't need that alert anymore. Whoops. There we go. So yeah, I think either of those could be nice little bounce areas. And again, you may say, well, wait, why would it bounce? It's dollar strength, right? Yeah, but if it's 0.75 and price comes to here, I mean, this is literally what this could look like. That is literally what that could look like. Actually, this would be up here, and then this would be down here, right? That's absolutely a scenario that could happen, okay? Now, if this happens, I'm just going to retire because we telegraphed it too much. But it absolutely could push down for dollar, for dollar weakness to come in. And what this looks like, I mean, you may look at this and say, wait a second, that is completely contrarian to everything that I'm hearing out there. You're insane. What's in your coffee? If it comes in as a 0.5, that would be considered weak for the dollar. Okay, weak for the dollar. Dollar's in a second position. That means that it would not strengthen the pound, but it'd be weak dollar. That would drive it up. And you're like, wait a second, they're raising it to 0.25. Yeah, 0.25 hasn't worked, and they're already at 9%. They need to crush their inflation down. The market may be wanting a 0.5, and if they get 0.25, that's disappointing. They feel like that's not enough. That would be pound weakness, would drive it right back down again. So an interesting kind of layout of how things worked. We could be completely wrong. The Fed could do 1% tomorrow, and this thing could literally just go all the way back down here. We could drop 250 pips on Wednesday. So a lot of different scenarios play out on this one. But if we do a 0.5 and a 0.25, what the actual predictions were from Friday, I think this is how it works out. Dollar CAD. So dollar CAD, I'd be very cautious. And again, we're tracking this one higher. Right now, the 128 level, I'm going to remove this so it doesn't confuse people. We are pushing into a level, and I could use that one, but we don't need it anymore. We mentioned 129.60 being a pretty decent level to turn and roll from. The problem with this right now is we are seeing lots of dollar strength come in. And again, when the dollar does well, the Canadian government tends not to do as well. I mean, oil is higher, which should strengthen the CAD, but we're seeing this rally higher, 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 higher. On a purely technical based analysis, the dollar CAD actually looks like it's more set up for a short than it is a long. Again, oil's up at 122.22. We're up 1% today. Where's the weakness coming in for that one? None, right? Canada's getting more and more money, right? They're like an oil company when it comes to, producing oil. We're doing nothing but rally up before an interest rate. That kind of signals that, hey, listen, it's already factored into the market. We're coming into areas of sellers, 129.60 where we're hitting right now, and 130, 130.09, which is another level that we've seen kind of sellers push off of. We know that 131 is a big psychological level. We know we have some selling coming in. We have a one candle kind of turn right here. There's a lot, and again, it shouldn't be green. We're not going long off that level, but I'll turn it yellow. These are all big levels. Let's see on a 4-hour where there could be a decent top from. Again, the 4-hour zone comes in there. Is that an old level? No, but look at this. Look how hard of how difficult of a time this level right here had to go through, right? It's hit it and drove back. Hit it, fought it again. Hit it, didn't even go as high, and then bam, exhausted. And that's right at the 131 number. So, whoops. There's a big level right there. So we have a couple different things here. 131 is a 200 pip move to the top side. And again, on a 4-hour basis, you can see there's a level right there. We got a couple decent levels. And again, when you see 4-hour levels, they tend to be pretty strong. So yeah, there's a lot of chunk through on this one. I mean, yeah, we've seen a lot. I mean, this is a very, very strong move in a very short succession, period of time. So I feel like the way right now, if I literally put a box over dollar CAD, I would say this one's looking, it's got to go. It's going to go a little bit more, but I mean, right now, if we run fibs off this on a 4-hour, we're got a 78.6, which I don't like the 78.6. I know some people do. Once we take that, we remove that out of the equation. It's going to go for a full retracement all the way back up. The full retracement's right there too. So this one's got a lot of things going on with the dollar CAD, but right now I have to say, listen, we're getting up in the area where I'm starting to think a little bit more bearish on this one. There could be some opportunity to short this one based off of what we're seeing. Dollar Swiss, we're over 1. I mentioned 1 by the end of the week. We finally come up and hit 1. And again, this is a 4-hour chart. We know that we have levels for 4-hour up here at the full retracement, right? There's kind of the full retracement level of this, the last fib. We're above the 78. Again, you can see that it went through and used parity to get lower, so don't care about this anymore. Where are the pullbacks in the other direction? Look at that. The start of this big move, right around the 50. So I would say dollar Swiss kind of also on a level, right? Is it going to be extended? I don't know. I mean, I think parity made sense in this one. But we are getting, again, up to 4-hour levels with blockbuster news coming in. And again, today, this is, we're up 54 pips. It's justified. But let's see, is there one behind that we can look at? Let's see. I don't need that anymore. Yeah, price is right here. Let's see, look at this. There's a level right here that has been hit a few times, and actually the last touch was not bad either. Let's see where this one is at real quick. Yeah, 1009, right? So again, large psychological number coming up, and again, we're in close proximity. Can we churn through here and get up that high? Sure. Let's see, how many pips are we from it? 70 pips. We're 70 pips. Maybe a little bit hard to chunk through, but I'm wondering if we hit this and go a little bit early. So I would say dollar Swiss, just like dollar CAD, kind of set it up for more of kind of a bearish kind of stance on this one. Dollar yen also running into major levels. We had these levels marked off. We knew that this one was already there. You're seeing it again smash into another level again, driving up the levels where we've seen sellers in the past, and we know they're higher level timeframes. It is also kind of looking like it's set up for more of a short. Why would we short? Again, if Powell only does a 0.5 and the market's already factored in 0.75, the 0.5 is weak. That sends the dollar down. Yeah, I don't know. I mean, they're all kind of set up. I mean, could this be the new basing level? This is not a fresh level. Is the dollar yen a little bit difficult to play right now because of the yen, influence with the, proxy for the stock market? Yeah, I would say so. But, if this was just a regular intraday and we didn't have FOMC, I'd say, this is probably set up for a short, some type of a pullback back down again, right? I mean, we had a short here and ended up breaking through, and then again, it crashed through it later. I I do like the way that this one is topped with 3 successive, lower wicks. Those are all good. Question is, and again, you can see we are having some problems. We're getting, some capitulation over the last 2 hours, and it's kind of stuck. Could this be an area for us to kind of get short? Potentially, maybe. This may be one of those things that you look at a call spread, right? If it spikes higher on a call spread, no harm, no foul, right? So whatever the cost end of the trade. If it's a knockout, you can't do it. If it's a binary, you can't do it. But could there be something cheap right now, the calm before the storm, with 4 days left to go for this week? Sure, there could be something in there. Could this one push back down again? Absolutely. We know that 135 is a big level. We know that the yen is going to get intervened at 135. We also know that the dollar is going to do some things at this level as well. Kind of set up. A couple of factors there. Bitcoin, all the cryptos have kind of stabilized themselves in zones right now. Not much to say about them. Ethereum is pulling back up, although they're way low right now. Ethereum is 25% of its price value of what it was basically a year ago, or not 6 months ago. So crypto people are kind of, Warren Buffett made some comments about them this week, and also not great. Here's what we got for oil, right? Oil, and I mentioned this earlier for the early session that we tend to be bullish at the oil open. It did. It shot up, and then 1030 is right here. We all know that 1030 is the common reversal time. And it went up to 2350. We're mentioning that getting up that high. I was like, God, I hope it can't get to 2350. It did. It based up at 2350, and then at 1030 is where the reversal was, and it pushed it back down again. We don't need this. Let's actually put it on the other side, though, and go from this low to high, because that's where people are going to be drawing it from. So, yeah, we're sitting there right now. On this, again, there's an old gap, and that gap was used. I think watching this price level right around $20.50 is going to be an interesting spot. It's $1.50 lower than where we are right now. It will be the 50% retracement level from the last low to high in the overnight. It was also the area where the gap actually occurred that, again, it punched through and kind of used that gap level. There is the API oil inventory report tonight. I do feel that oil will be a little bit foreshadowed, or a little bit kind of overshadowed for tomorrow, just because, again, FOMC raising interest rates. We know where it's at. We'll look what retail sales looks like. The one bit of news we had was that Biden said that he will be going in July, which I think is a little bit too far. Where is it? I don't even know where it is right now. It was over here. Oh, it says discussing irresponsible tariffs. Yeah, we're not going to do that. This one right here. The fact that it's not happening until a month from now, I think is honestly, this should have been like, hey, listen, the 20th. We're going next week, right? We're agreeing. Waiting an entire another month doesn't increase supply, which is, I would say, is more positive. And again, that's why we saw the initial surge forward, and then again, the profit taking from that one. I think getting long oil is probably a decent thing. Again, we're extremely high. Again, I know Europe is very, very focused on eliminating all need for Russian oil whatsoever. Again, that lowers one of the major areas of supply for the world. Saudi Arabia helping is great, but it's still 2 months away. So again, we'll see what interest rates and things like that do tomorrow. I think getting long oil is not necessarily a bad thing. Now, natural gas is actually taking a major decline today. It's pushing back down. My hopes of getting to 10 are slowly being dashed here. We went all the way back down to 7. That's a major push to the downside. I mean, that's a $2 and actually, I guess a full dollar, right? $8.80 down to 7, so almost $2. Again, it is seasonal. It makes sense. It was supposed to pull back down again. It held on until I got propane, although I only paid $2.99 for propane, not 7. But again, having this pull back down again, it was probably waiting for me. But again, we're not hearing much right now. We got about another month before people are going to start worrying about what the kind of global supply for winter time looks like. So again, not necessarily a bad spot. If you are a natural gas trader, I would say any type of lowering and basing down here, this could actually be a decent bottom down here for natural gas. Again, parabolic move. Could price come right back up again? Whoops, not that one. Could that come right back up to the origin of the move? Yeah, that's a parabolic retracement strategy. We're retracing this back up to the origin of the move, and that's basically bringing natural gas back up to $8.71. Gold. So gold just had a pullback, again, based off of where the low was. We talked about 1813 being touched today. It's been grinding down there. Right now, I'm looking for 1800. Again, we've touched this area, this target twice now. 1800 is my target for today. Again, this is going to be a crapshoot. If we come in at 0.5, I think gold rallies. If they come in at 0.75, I don't think gold does too much. I think it actually will probably grind a little bit lower. If we come in at 1%, I think gold takes a big handle. So basically, the responses I see in gold is 0.5, it's going to, slowly start to go this way. I think we come in at 0.75, it's more of an angle like that. I think if it comes in at 1.0, I think it does something like this tomorrow. This is kind of what my expected reactions are. The way to play gold, again, it's a little bit too early to look at this one now. Look to see what the Europeans do with it. They will have the data. They will know ahead of time. And then we'll have the opening response to retail sales. If retail sales is bad, I would expect this probably to be more accelerated to the downside. If retail sales is more positive, I would kind of expect it to be more the middle of the road, because again, if it's a positive number, meaning people are still spending, the Fed absolutely can do 0.75. It's negative, it's probably more of a 0.5. And right now, if it's a 0.5, that's weak. I think this probably heads higher. So 0.5, 0.75, 1.0 is kind of how I'm projecting these tomorrow. Silver obviously chopping back and forth. Yesterday morning, we said 21. We tagged 21. I don't think one of the uncles helped us, right? Whether it be Uncle Warren or Uncle Jamie. We formed a new level. We pulled back just past the 23. We've used that level twice now to push lower. Right now, my target for silver is going to be down here at 2038. I like how we're getting a basing level right here. This could, in the overnight, give us a new level of kind of established risk to take this lower. This is also affected by what's happening with China and Australia. But again, this being the proxy, I think it probably heads lower. All right. So that was a lot all at once. Again, we always speed up it kind of at the end. With that said, that's it for today. Mark your calendars for June 21st. A couple things in the next 24 hours you need to watch out for. 4:30 today, the API oil inventory report to give us an idea of what the oil inventory is going to look like tomorrow. Tomorrow morning, first thing, retail sales at 8:30 in the morning. Absolutely, retail sales is one of the top 3 news movers. It's expected to be 0.1. It could potentially go negative. And again, that makes it a really, really difficult job for Powell tomorrow. 10:30, we have oil inventory report, and then FOMC raising their interest rates. Thursday, Pound raising their interest rates as well. That could be a big disappointment with a 0.25 versus 0.5. But like I said, right now it's like a 3-sided dice between 0.5, 0.75, which I think is what the market has factored in, and 1.0 is what the industry is calling for. So saying that the market is daring them. So a lot of excitement. If I said anything too fast or you don't fully understand it, and if this is your first time, you're more than welcome to email me, support@keeptradingsimple.com. With that, thank you for joining me today, and I'll catch you guys tomorrow morning for the Nadex presentation on YouTube, 8:45 a.m. Eastern Standard Time till 9, and we'll see what we can prepare for the day tomorrow. Take care, guys.